Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now here's your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. And today we're going to do a Dear Mike podcast where we answer some of your frequently asked questions. These are actual questions that we've gotten from either current clients or prospective clients. But before we get into the questions, let me introduce you to my co-host, Ellie Moffitt.
Hi, everyone. It's really great to be here. And I'll do a quick introduction for our company. So Sales Tax and More, we are a full service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, audit defense, exemption certificate management, and like our name states, more, which I will say leads us to have a lot of questions like this. This is how we get those questions. It's because of these services that we offer. And we've also found that this kind of podcast style is really popular. So if you have questions yourself, please send them in. Please reach out to us if you'd like to work with us. We'd love to work with you as well. And let's jump in here, Mike. So when does someone need to register to collect sales tax?
Well, this is, I could go a number of different ways. This is a big, juicy question. It seems kind of simple.
I almost said we're going to go broad to start out here, but
yeah, very, very broad. I see a number of different ways we can go with this, but let's start real 10,000 foot level. You need to register to collect sales tax when you have what we call nexus, which just means some sort of link or connection with the state. What you sell is taxable, and your sales are material. Now, that last bit, the sales are material, that's something I say. The states don't say that. Once you have nexus, the states think that you should collect from dollar number one. I think we need to use common sense. So just because a state says you should do something does not necessarily mean that it makes good business sense to do so. For example, if you only have $1,000 in sales during the entire year, and you have an 8% tax rate, you will have collected $80 in tax. Now, there's a cost to getting registered, whether you do it yourself or you hire someone like us. And then once you're registered, you got to file sales tax returns. So some states, like Georgia, you're going to be a monthly filer for at least the first 6 months. So I don't know any state, or I just can't make the math work there. It makes sense. Let's say that you don't collect the $80. Well, penalty and interest on that is probably 50%. Maybe let's double it. Let's say 100%. So $80 becomes $160. I still don't know anywhere, even if you're doing this yourself, where you can make that math work. Is it worth your time to go out and get registered and then have to file a sales tax return every month to remit $80? I think you're better off in that instance waiting for the state to find you, and if they do, they're going to want their $80 plus their penalty and interest, so $160. You're still better off because it would have cost you more than that to have gone out and get registered. So to sum this up, when do I need to register to collect sales tax? Number one, you got to have this link or connection that we call nexus. Number two, what you sell has got to be taxable. Why file $0 returns? Now, some states say you should do that. Even if you don't have taxable sales, they want you to file a return. I say let's use some common sense. So most of our clients only get registered when they have taxable sales. And the third thing, the sales have to be material. Remember, that's me saying it, not the states. States think you should be registered from dollar number one, and they're going to, if they ever find you, they're going to want their tax from the $1 when you created Nexus, but you're still going to come out ahead of the game so long as you're looking at whether this is material or not. I'm a big believer in getting registered if your numbers are material. In other words, would it leave a mark? Would you say, ouch, I really wish I got registered at the levels you're at? So every person has to figure that out on their own. And we talk about that in a number of our different webinars about what people consider to be meaningful. So basically comes down to, how fearful are you? What's your risk tolerance? You're going to have a higher number if you're fairly risk tolerant. If you're hearing footsteps and you're afraid the state's going to find you, you're going to have a lower personal number. Capital reserves. I mean, if you have a lot of capital reserves in the bank, you're going to have a higher number. If you have lower capital reserves, you're going to have a lower number. And then profit margins. If you get a 2% profit margin, I mean, this is counterintuitive. You're going to want to get registered at a lower number, because if a state does find you, it could literally put you out of business. So, if you figure the average sales tax rate is 8%, you're only making 2%. Not only have you wiped out, if the state finds you 3 or 4 years down the road, have you wiped out your profits in one state, you probably have put yourself out of business. So, risk tolerance, capital reserves, profit margins. Those are the three things you got to look at when determining if your sales are material. And then if you have this linker connection, we call Nexus. If your sales are taxable and if your sales are material, go ahead and get registered.
Yeah, so big question here. I mean, really, there's a million in between questions we could ask about it, but I think that's a great starting point. So thank you so much, Mike. And we're going to switch topics entirely. So do states care whether sales are taxable or exempt when analyzing economic nexus thresholds? Do they look at total sales or just taxable sales?
What's my favorite answer, Eileen?
I'm going to go with it depends.
Oh, yes. So often when it comes to taxes, the answer is it depends. And in this case, it depends on the state, because the answer to that is all of the above. E, do states care whether sales are taxable or exempt? Well, it depends on the state. When doing economic thresholds, some states say all exempt sales are included. Some say sales for resale are excluded, but all other exempt sales are included. Some say they're all excluded. So it's really on a state-by-state basis. And again, do they look at total sales or just taxable sales? Really, that's just another way of phrasing this. And some states look at all sales. Doesn't matter whether they're taxable or not. And other states just look at taxable sales. And if we wanted, we could really tie this answer back to question number one. When do I need to register to collect sales tax? When you have Nexus. And determining where you have Nexus is the first step and most important step, because, state can't make you do anything if you don't have this linker connection with that state that we call Nexus. So you don't even have to worry about collecting tax if you don't have Nexus with that state. And there are basically two types of Nexus: economic Nexus, which we were just talking about, and then there's the old-fashioned Nexus or physical presence Nexus. So how'd you like it that I tied those two questions together?
You know what I was actually thinking as I was asking it? I was like, oh, he's good. Okay. I'm wrong for saying that these aren't related. So I'm glad you did. And we're just trying to keep the listeners on their toes a little bit. What am I doing wrong? So next question here, Mike, is do exemption certificates expire, and how often should people be requesting updated ECM certificates?
What's my favorite answer?
It depends. There's a lot of that going around today.
Yeah, it goes around a lot. And again, it depends on the state. And it depends on the type of certificate. So sometimes a resale certificate expires, but an exemption certificate does not. A resale certificate is a type of exemption certificate. It's a specialized certificate. And there's distinctions between the two. There are some states like Florida that say that it expires every year and that you should get a new certificate every year, unless you have a continuous relationship, uninterrupted business. That's the exception rather than the rule. In general, you want to be asking for a new certificate every year. Now, there are other states out there that have unwritten rules that it doesn't say on the certificate that this certificate is good for just 1 year, and you're supposed to know that. But very few certificates, actually expire. There are quite a number, but the majority of them don't expire. However, just because there's no expiration date on a certificate doesn't mean you shouldn't be updating them, because a lot can happen. One time I was doing an exemption certificate review, and I looked at one certificate and it was 27 years old. And I'm sure it was valid when they accepted it, but it was the wrong company. It was the wrong state. This company had switched states, and they never updated their certificate. It had switched ownership. It had switched entity types. Basically, anytime a sales tax number changed, the previous certificate is no longer valid. So even though it's valid when you collect it, a lot can happen. So as a best practice, we believe, and we do a lot of exemption certificate management. So all of our clients, we have them update their certificates even when they don't expire, at least every 3 years. And the reason we do that is there's a lot of audit periods out there that are 3 years, and a lot can change in a 3-year period. It's not quite going to be like the one I looked at for 27 years, but a lot can change. And you want to make sure that a certificate that was valid when you collected it is still valid today, because the auditor is not going to say, oh, well, I see this used to be valid, so we'll let you slide if it's not valid today. If it's not valid for the period of the audit, too bad, so sad. And nowadays, audits, it's a matter of every I being dotted, every T being crossed. It used to be a matter of substance over form. In other words, if an auditor could tell that it was an exempt transaction, they gave you a whole lot of latitude. Nowadays, since that 2008, not so much. Now it's a matter of form over substance. And that, like I said, simply means that every I has to be dotted, every T has to be crossed. Since so much can change over a 3-year period, you want to make sure that that certificate is still valid today. When we say valid, that an auditor would not kick it during an audit. Things like the name being the same, things like it being totally signed, completely filled out. When certificates are kicked during an audit, they're usually small things that sometimes slide underneath the radar. And it all circles back to this question: do exemption certificates expire, and how often should I request an updated certificate? Even on the ones that don't expire, we believe they should be updated every 3 years. And for our clients where we do this, that's the position that we take.
All right. Well, thank you so much, Mike, for answering these few questions for us. And again, a reminder to our listeners, send us your questions. We'd love to answer them on the podcast. We'd love to work with you if you're looking for a sales tax partner as well. We offer many services, not just the ones that I mentioned today. And if you want to just support our podcast, please like and subscribe. And if you have questions, you can reach out to me directly at emoffat@salestaxandmore.com. That's EMOFFAT@salestaxandmore.com. Or you can visit our website, salestaxandmore.com. And in addition to the services, in addition to this podcast, we have an entire series of free webinars. We have blogs. We have a lot of free resources on our website that are available and that you should check out. So thank you so much for listening today and have a wonderful day.
Thanks, everyone. And we hope to see you on the next episode of the Sales Tax and More podcast. Bye-bye.
Thanks for listening. Be sure to hit subscribe and check out all the resources we have out on the web.